Hello, I'm Philip Moon from the Channel Enablers Division of Miller Heiman. In many industries, channel salespeople have to compete for partner investment, mindshare and focus. And not only do they have to battle with their traditional competitors, they're also competing against the partner's own internally generated products and services that provide the partner with valuable revenue. So what influences partner investment and focus on a vendor? We've researched this question many times over the years, and ultimately choice comes down to an individual combination of business and personal priorities. However, it is possible to draw some fairly general conclusions, and three areas always seem to rate quite highly. Any successful business owner knows that their customer base is one of their most important assets. They know that if they don't continually strive to satisfy and retain customers, their business won't be around for long. And while statistics and products will vary with industries, we know that resellers get the vast majority of their revenue from their existing customers and markets. When partners receive regular referrals and have a great reputation, it decreases their selling costs and increases the value of their business. So when a partner is considering which vendors and products to invest in and focus on, they'll carefully consider the degree to which the end users will be satisfied with the vendor's product and services. Quality and supply issues will undermine the customer reputation and so have a negative impact on the value of the partner's business. Vendor channel salespeople need to be able to explain how their products and programs will bring additional value to the partner's customers. And not only that, they must be conscious of the fact that in many industries, the vendor's own product or service is only a component of an overall whole product solution that the reseller is providing to its customers. So channel salespeople need to focus more on how they can enhance the partner's whole product more than the degree to which their small component might be slightly better than a component from another vendor. The second key area I want to mention is closely allied to the first. It's the vendor's own brand recognition and the customer's perception of what this brand means. We know that in high growth phases of the market maturity life cycle, early majority customers want to buy from market leaders. Product features and technical differentiators become a little less valuable to the customer at this point, while factors like perceived brand value and risk become more so. Resellers seeking these high revenue growth market opportunities know that selling the leading brand that consumers are asking for means quick sales cycles and potentially higher margins. Many resellers don't have a strong brand of their own, and so much of the value that brand leading vendors can bring to a reseller is the strength of their brand. With this in mind, vendor channel salespeople must sell the broader value of their brand rather than the feeds and speeds of their product or partner programs. This doesn't mean that the vendor's partner program is not a major driver of partner investment and focus. But what we've learned is that most vendor programs appear to be quite similar to partners, and many of the programs that are offered don't drive partner behavior. According to our research, as little as 10% of vendor partner programs actually influence partner behavior and positively differentiate the vendor. But one program element that stands out is vendor consistency and fairness. Clear and well-communicated rules of engagement are essential, and partners don't even have to like the rules, but they do have to be clear and applied consistently and fairly. The major factors that influence your partner to invest and focus much of their attention and resources on your company could be any one or a combination of these reasons or more, and it's important that your channel salespeople are regularly asking partners what's important to them. These general factors probably explain why your partner signed up with your company in the first place, but it's likely that your goals, targets and partner expectations are higher now than they were last year. So if you want your partner to increase their performance year after year, making those ever-increasing targets, you need to continually focus on changing your partner's investment and behavior.